What's up, guys? It's Rustic, and I'm coming to you today to, as requested, bring a video that digs a little bit deeper into the invite only premium Pinewave script smart money concepts indicator that is available for the premium members of Traders Helping Traders. I participated in a little bit of the development. I didn't have anything to do with writing the script, but I was in conversation with AJ as he was writing the script for this because specifically smart money concepts is something that I've been a lot of a part of when it comes to the Traders Helping Traders Discord. So oftentimes AJ would ask me questions related to smart money concepts while he was building this indicator. So what I thought I'd do, since I see so much activity in the chats on the Discord saying, how do you do this? How do you do that? What does this mean? What does that mean? What I thought I would do, since it's a brand new indicator, is walk you guys through some of the stuff that this indicator can do, because it's a cool indicator. Has a lot of different stuff going on in it, a lot more than what the Lux Algo smart money concepts indicator can offer. And so I figured we'd do this together. Just check it out. So this is unedited. This is going to be raw and uncut as I go through this with you guys to develop and look at what these different tools do. Okay, so what I want to start off on. So I want to start off on just a very basic daily chart, and we're going to just go through some of the different things before I get into how you can really use it for your benefit. Okay, so we're on a daily chart. All I got running is the Pinewave editor, or the Pinewave indicator. And we're going to go step by step through each setting. Okay, so what I'm going to do is I'm going to turn everything off. And we're going to go through and we're going to show you guys exactly how this thing works. Okay, I got everything turned off. So you see on my chart back here, nothing's going on. First thing we're going to do is we're going to see if we can get premium discount to show up here. So you see, I'll show you now. We got our high, we got our low. This is going to give us our premium and our discount range. Let's see if we can get equilibrium to show up. Those are equal highs and equal lows. That's market structure. I don't see equilibrium in here, so maybe that's something that I'm going to have. I'm going to actually start writing down some things that maybe we can additionally edit. But I don't see equilibrium. Equilibrium is an important concept when we're looking at premium discount. So I'm going to start a chat here with AJ. And as we move through this, we're going to also look at areas that we can add. All right, so we got premium discount on. Next thing we're going to look at turning on is market structure. So as we move back to the chart, we can see this is giving us our market structure. So just those two things alone being on, we can see our most recent swing high, swing low on the daily chart right here that we're still inside of. We have not taken a higher or low. We're in between discount and premium. Now we have our market structure right here, change of character. Over here, you saw a break of structure. And these are on a bigger time frame chart. So here we had a change of character, break of structure, change of character. Right, once we break this, we should see another break of structure. But those are going to be external. You can also turn it on to internal. Internal is going to give you all of these little ones here. right? So it took this big one off. Okay, it gives us our little micro change of character, break of structure, right? So all of these things, these are all internal. Right here is an internal because this is internal to this shift, right? So we have a bigger change of character with all these micro moves happen on. And then again, if we take this, we'll have a bigger break of structure right here. But right now, it shows all those internal structure shifts. So that doesn't necessarily tell you, how to trade a stock or whatever. But some things you can look for confirmation is, say, in this move here, okay, we were selling off. We were seeing a bearish change of character, bearish break of structure, bearish break of structure, right? Even this wick here, bearish break of structure. And then we pull up, we get a bullish change of character. Okay, that could have been your confirmation that you would be looking for an entry. Doesn't mean you enter on that change of character, but you're looking for an entry to go long because we've gone from a bearish sell-off to now a bullish move. So bullish change of character, came back down, right? Then we rallied from there. Then we got our break of structure. We're not going to trade the break of structure, but what we're doing is we're looking for a good entry to potentially go long, because we got that bullish break of structure. Now, because it is the second one, we could have seen a reversal. Oftentimes you'll see like two of them, a change of character and two breaks of structures. That's pretty common in like a wave pattern. Here you got 1, 2. Right here you got 1, 2, 3. Here you got 1, 2, 3. You don't usually get a lot more than that. Here you got 1, 2, 3. Right, 1, 2. So you usually get like 2 to 3 of these kind of things setting up. Here you got 1, 2, 3, 4, 5. So that's pretty rare occasion. But anyways, that's just the internal structure. So that part of the tool is just showing you basically when we take, different liquidity levels, and those levels are found in highs and lows as we break them. So that's that part of the tool. Okay, then equal highs and equal lows. We're going to throw that on, see if there's any additional equal highs or equal lows that I see on here. Doesn't look like on this time frame there's any, but what that part of the indicator is going to do is going to find lows that are equal or relatively equal, basically the same, and it's going to identify them for you. Let's see if we can go to a different time frame and see if it shows up for us. Sometimes you don't want the internal and external structure on every time frame. It's nice on the daily. I don't suggest it on the lower time frames. It just creates a lot of noise. You can do those things all on your own, or you can see them, but it just, or maybe when you zoom in, it's not quite as noisy. But that's up to you to decide. I'm just letting you guys know what those things are. So I don't see that the equal high, equal low tool seems to be working, because I do see relative equal lows here that should be marked off. So I'll make another note. Check equal high low, not registering. All right, so anyways, we'll go back to our daily chart. Okay, and that's what our equal high and our equal low should show. But the theory on equal high and equal lows from Smart Money Concepts is that equal highs or equal lows get taken. So something I would point out, like right here, we have relative equal lows. It's not perfect. It's not exactly a straight line, but it's pretty close. So this would be an equal low, which would say, and who knows when, but that we'd be likely to come back down and take this, because this wick low are relative equal lows. So that could be here we set them, we're going to come back down and take them. Could be that we head higher, then we come back down and take them. But it's highly likely that we do take them at some point in time. You see, there's no equal lows here because we came back down through them. And so I'm trying to see if there was any like equal lows that it's like, well, why didn't we take that one? Maybe way back down here at $23, and we'll probably in the end of Tesla's life cycle come back down and take those equal lows. So nothing, no promise on when that happens, but they should get taken at some point in time. So I'm going to take this off because it's not part of the indicator, but I was just showing you what an equal high or equal low is. And, you know, oftentimes when they're really close together like this, we'll also call them a double top or double bottom, right? But those are only double tops, double bottoms are literally only for like when that move happens right away. Like here, double top, you know, wick high, wick high. We'd call them equal highs, but it's also a double top, right? So that signaled the reversal. But over here, wick and wick, those aren't doubles. That's from way back in May all the way to October. Those are equal lows. Those will get taken. So we got that. Let's put on swing points. See if swing points work. Okay, swing points is going to show us our higher highs, our lower highs, right? When we're looking for a series of higher highs, lower highs, higher highs, lower lows, right? Higher lows, lower lows, whatever. Whatever order you're looking for. Okay, this is going to show it to us right here. Higher high. Right? Set a lower high. Tells us we're in a bearish environment. Right? So then we're looking to short support or short resistance. If we're setting a series of lower highs and we're not breaking trend, then every time we get back up to resistance, we're looking to go short. Okay, until that's broken. Same thing with lower low, right? Higher low, lower low. There's another higher low in here, but we're setting the same series, right? Here we have a higher low, lower low. Right? So as those develop and they paint on your indicator, you can see we have what appears to be something that's channel-like. Right? If you wanted to take this and you wanted to use your parallel channel tool, right? We could do something like that. Let's connect those levels and then pop that out to, well, however you want to do it. I mean, we got something that appears to be channels with either small breakouts, or we have, you know, what appears to be a little bit more like a wedge or a, let's try this. It doesn't capture that point right there, but it does capture closer to that point right there. So either way, right? We got our points, but higher low, lower low. So we're setting a series of lower lows here, right? Because that was a low, lower low, lower low, right? Higher high, lower high, lower high, lower high. Right? This one hasn't labeled. The indicators are usually a little bit slow to actually get the labels out there. But when you start to see those patterns occur, that swing point indicator can help you identify those, right? Especially if you're new to trading or newer to charting, having those on your chart can be very helpful. Because look at this, if you saw the higher high and the lower high, then you would know, okay, I'm looking for another lower high. If we took a higher high, right, that'd be a different story. Then we're connecting lower high to higher high in that. And then we have a higher high, lower high, then higher high. We'd be expecting at that point the potential of another high at that after that. Okay, so the next thing we're going to look at, and you can adjust some of these things. How many pivot points do you want to go back? Right, this is automatically set to 10 pivot points. You can also change your labels to be larger. See, now they're bigger, so they're easier to see. You can also, how many pivot points do you want? Market structure points do you want to go back? This one's set to go back to 50. So those are all things that are adjustable. Okay, these are just market structure. Let's see what enabling the colored candles does. Okay, so the colored candles look like they show momentum. right? I'm not sure how AJ set this coding. It's probably related to maybe a range filter or something like that. But many of you guys have seen the Heikinashi candles. And the Heikinashi candles, they change the candle structure. This does not. This changes just the color. So again, not sure how it's coded, but what it appears to be is that red is showing bearish momentum. White appears to be, or the lightly shaded pink or green, or whatever. I think it looks like lightly shaded pink to me. But that would show that we are undetermined as to, even though we're going up, the momentum is not there. If these are based on momentum or trading over a range or something like that, right? We start to see the red candles again. We get the white candles, we get the red candles back. So in a situation like this, you're looking to probably trade, white candles or wait for confirmation of the color actually changing, right? So in this situation, we see the move up. We see that change of character, which is bullish change of character, and then the candles change to blue, and we caught a move up, right? Looks like here. So maybe they're based on the market structure shift. That's what they kind of look like. So here we got white candles are trading down. We get a bearish change of character here. Candles change to red. Okay. Same thing here. Candles are still red. We have not confirmed any kind of bullish change of character. We continue to trade through those breaks of structures. Right. Candles stay red. Here we see it change. So we go from red to white or red to pink. Right. And then there's no confirmed, right? We don't ever take one of these tops, so there's no confirmation. So obviously the candles don't change to this bluish color. But once we did cross and we got that bullish, right? So this just shows us a change of character. This shows us a change of character plus. That looks like where our candles turn, and then they change to blue. And it looks like maybe you trade the blue candles only. So I see something similar here, blue candles, right? So we're trading those. If they're going white, maybe we're just watching if you're using the candles for confirmation. I don't use the color-coded candles at all, but I'm just showing you one option. If they work for you, they work for you. But colored candles can sometimes be the confirmation that you're looking for the entry. It's not going to give you a good exit. On the daily, if you entered down here on a blue candle and you exited, up here on your first white candle, you still would have made a nice bit of money. But at the same time, let's find a situation that doesn't work out well. So here we got red candles, right? We'd be entering on the first red candle. We trade up, candles turn white. You lost money on that one if you're just trading candles. So, try it out, give it a whirl, see if it works, but that's what the color-coded candles are about. I'm going to turn those ones off for now. Next thing, we're going to look at order blocks. Okay, order blocks are very important. Throw it up there. Here we go. This one looks like it's counting internal order blocks. So this is actually a swing order block here. These are internal order blocks here. And then I see another internal order block here. Let me see if we can adjust the settings. So this one's showing 7 order blocks back. It's showing whatever the chart is, so you can also change that as you go down into like 1 hour charts. If you're just looking at you could have the daily order blocks on there or the weekly order blocks. Right, so that's something you can adjust. If you're a day trader like me, I'm trading on the 1 minute chart. I'm caring about what happens on the 15-minute and the 1 hour chart. So if I was on the 1 minute chart, I don't want to see 100 order blocks at all these different points because price has jumped around back and forth, back and forth. I want to see what happens on a bigger scale, but I don't always want to run 2 charts at once. So what you can do, and I'm going to pop over into this one here. What you can do is you can see here, I've got all the things on this indicator, so pardon me, but what I can do is I can change my order blocks to just show on the 1 hour. Okay, press OK. So these are just my 1 hour order blocks here, here, here. Right? And then when I'm over here on the 1 minute chart, let's make sure it's saved. Okay, it didn't. So I also want it on the 1 hour. So now I can see my 1 hour order blocks, right? They're the same. This 15-minute chart, 1 hour order blocks. Here we go. 1 hour order blocks. So when I'm watching and I'm trading the 1 minute chart, that's one of the areas I'm looking for price to go up to or to down to. Looking for it to go down to the 1 hour order block. Looking for it to go up to the 1 hour order block. Now, if I change this back to 1 minute, okay, there's a bunch of tiny little internal order blocks, but that doesn't give me a whole lot of information when I'm looking for where price is heading, right? Because if it takes this, I guess it's heading to this. If it takes this, I guess it's heading to this. But that doesn't give me much. I'm going to be closing out my positions pretty quickly if I'm entering, looking for one order block or the next. Right? Instead, what I care about is the longer time frame stuff, the 1 hour order blocks when I'm trading the 1 minute chart. So I'm looking for price to go up into this order block, into this order block, or down to this order block. It gives me a lot bigger trade because currently we're at 240. And if I'm looking for price to head down, looking for it to head down to 224, 224 and a half down to 223.50, right? So that's a highly likely target if we are heading down. So I want to know where that is on my short-term time frame, but while I want to know on the higher time frame where those are at. So that's one of the ways that you can change that order block setting. Okay, you can also adjust the color. Right now it's set to gray. We're going to switch on the internal bull bear activity, and we'll see what that does. So the internal bull bear activity looks like it gives us some additional information here. So not sure if I'm reading this correctly, but what it looks like is maybe shows which side, and maybe this is based on volume, but it shows that on this candle here, even though it was an up close candle, we got a higher red bar inside of this block instead of this blue bar. So that's telling me there was actually more bearish activity inside of that block, but the bulls ultimately took that block, right? Because it ended up being a green up close candle. But it looks like this is a volume, maybe volume indicator in this candle. So here also, right? This is an up closed candle with a lot of bearish activity inside that candle. Here, down closed candle, a lot of bullish activity. So it seems to be also saying that in those candles, before we make a run, we see a high amount of volume in the direction that is opposite of where we're going. Because all of these, I guess this one down here is a small up close candle that had some bullish volume in it. But other than that, we have up close candle bearish volume, down close candle bullish volume, right? And up close candle bearish volume. So those are something that this indicator is looking at is when these order blocks were set, what the bearish or bullish activity is. That's also not something that I track too much, but that's exactly what that offers in that internal bull bear activity. All right, so the next thing we're going to look at the calculation method. So it can use wicks, it can use closes, it can use averages. All of these things you can change. I'll just switch it and then we'll see what happens when we switch it, okay? So if we're using wicks, it shows us some extra order blocks. So let's go back to touch. Okay, so what this is doing is it's removing order blocks or adding order blocks if we even have candles touch it. Okay, so it's mitigating those order blocks, saying that they're no longer on there because we've traded into them. But if we say with wicks hitting, not just touching, but wicks going into it, we have some additional order blocks. Right? We have an order block here. We have another order block here. We have an additional, nope, that one was already there. So these are just on the way down. It had taken off two different order blocks because here we traded into it, so it closed it when it was on just the touch setting. So we can do that. We can also change it to close and see what that shows. It doesn't look like it shows anything else, so maybe it would show on another one. And then we'll look at average. So just different ways that the order blocks are calculated. So it took out those order blocks as well on the average. If I was using it, I would keep the wick on. That's the one I would put. See if we have overlapping ones. Yeah, so you can also choose to hide the overlapping order blocks. If I was using this, I would keep the overlapping order blocks on. Shows the length. The length is going to adjust how many candles that these will extend. So let's change it to 10. Right? Let's change it to 30. So I think these are based on how many candles passed. Yeah. So it's going to be how many days out are we extending all of these or open order blocks past current price. Could also choose to extend it indefinitely until they get closed. That's the way I would probably do it. Looks like there's a volume setting. So instead of a percentage, it's giving you a volume reading inside those order blocks. So that's a handy tool to have. You can see up here at the top, right? We had a lot of bullish activity, and there was 1.242 billion in volume. That's huge, right? Big order block here, right? 1.34 billion. This order block here, 1.23 billion. You can see high volume in these order blocks. So that could be something that you're interested in seeing. You can also put percent on there as well, so you can have all of those information all inside that order block, which is kind of cool. If I was going to do it, I probably would leave it with the volume and the percentage off. Not really things that I care about too much, but still sweet nonetheless. I also probably wouldn't run the internal bull bear activity. That's just not information that's useful to me, but could be useful to somebody else. What I do care about is the midline. Midline is called consequent encroachment. Consequent encroachment is something that is taught in Smart Money Concepts, taught by ICT. And you can see that in each of these order blocks, we trade back up, right? Almost to consequent encroachment, right through it by a wick here, right? And this is Tesla's chart, so it doesn't behave perfectly to the algorithm, right? We traded it back up into this order block to consequent encroachment as well. So when you're watching those things, you could anticipate that if we did start dropping, we would then come down to consequent encroachment of this order block potentially. Okay, but consequent encroachment, we haven't got back up to this one. So there is also a chance that when we start taking these out, we might see us come back up into this consequent encroachment and close that. But anyways, oftentimes, a lot of times, when we're seeing these moves back up, we're coming to consequent encroachment before we then see some kind of reaction. We're not trading we're not closing them all the way through to the top, right? So midline, important to have that on, in my opinion. Then we're going to look at liquidity levels. Okay, so the next thing we can do, we can see liquidity. We got blue. Okay, we got red. I would change the colors. Wonder if that's the thickness. Let's try and adjust this and see if that's the thickness. Nope, that's just how many probably liquidity levels we do back. So I would change these. I try to keep things fairly monochromatic when it comes to my levels. But these are going to show you liquidity levels. And then the gray ones here are going to be mitigated liquidity levels. So liquidity levels that we've already traded down through. And that's why they become gray. So right here in the black, we have our liquidity levels. Right over here in the gray, we have our mitigated liquidity levels. So these are key high time frame liquidity levels that we want to be watching for. Okay, now let's look at liquidity grabs. This is going to be spots where we already grabbed liquidity from. See what the chart shows. All right, so I don't see anything on the chart specific to this. So maybe it's on a different time frame, or I'll send AJ a message and see. Let's check on another time frame and see if there's any indication. All right, so let's change these colors to see if we can see them better. Nope. All right, so I don't see anything on the liquidity grab. Let's go to the liquidity levels and see if we add them both, if it does anything. So I don't see anything with the liquidity levels, so I'll send AJ a message. And all right, so we got that note in. All right, so our liquidity levels, got those. See if that shows anything. Nope, still not seeing anything. All right, so I'll stop messing with the liquidity levels, but mostly this is what I would use anyways, is this liquidity level. And I'd be looking again, you see these, those are your high time frame points of interest for liquidity. And those are the targets when you get moving to one side or the other as far as liquidity goes. So then we get to fair value gap, right? Fair value gap is a measurement between three candles where you have inefficiently delivered price. So you have the option to hide filled fair value gaps. Now, I don't love how the indicator determines whether a fair value gap has been filled or not. And because sometimes you also get inverted fair value gaps, where it's one fair value gap, where a fair value gap gets painted on one side, and then you end up with a fair value gap in the exact same place on the other side. And so this fair value gap indicator does create a lot of noise on your chart. Let me see if we can change we can't change the time frame. I think I did ask AJ about that, making it so that you can change your fair value gap to show up on only certain time frames. What I would suggest is making this show less fair value gaps, so it just breaks down the noise a little bit. I don't see that we can extend the fair value gaps out any further, so it is what it is. Like, the fair value gaps are these green and red boxes. Let's see if we can put labels on them. Show labels. So see how these say, see how it says fair value gap plus, fair value gap plus, fair value gap negative, fair value gap negative there, plus, right? So there's your labels. I'm going to see if you can move. I'm going to make a note. See if we can move the fair value gaps labels to center of fair value gap. Okay, got another note in there for that. But that's your fair value gaps. What we want to see is we want to see price move away from a fair value gap or trade into and then move away from and then return to. On the daily chart, because you get a lot of gaps, it may not be the best chart to look at it. Let's look at like a 1 hour chart for our fair value gaps. Okay, so what I mean by this is we see this inefficiently delivered price to the upside. We get a fair value gap. Okay, we see price move up. We see price come back down into the fair value gap. Very common that it happens like that. Nothing promises how high or low this is going to repel away from the fair value gap. What we do know is price is likely to come back down into the fair value gap. Right? We also see some over here that have been mitigated. You got a fair value gap here where price ran away from, came back down to, ran away from again, then traded through. Okay, we have a fair value gap down here where price came back into, has since gone away from, and has not come back to close this fair value gap or this fair value gap here. So lots of different fair value gaps. That's what your indicator is showing you. So the way you use those, depending on what time frame you're on. So if you're on the 1 minute chart, you can use the fair value gaps to, and this is going to be after hours, so it's not going to be a great example. But basically, on a 1 minute chart, you see a fair value gap laid. You could potentially try to go long there. If we come back down and close the fair value gap, you just close the position out. Okay, and you can see that on other time frames on the chart. Actually, let's go to like a 15 minute. Okay, here we have a fair value gap, right? Price came back down to it a few times, ran off of it. If we start closing that fair value gap and attacking these lows, you just close the position. It's a low risk trade. Right? This did not meet its objective at the end of the day, but basically in your fair value gaps, if you get a good entry in a fair value gap, you're looking to target an old high. You're looking to set your stop loss at an old low. It's a 2.86, risk reward if you get this fair value gap entry, right? And if you run it up, we didn't quite get there, but we also didn't get stopped out. Right? That's kind of the way you play those fair value gaps. So I can show you another one over here. And that would be, an entry in this fair value gap. Let's just say the beginning of the fair value gap. Okay, we're going to target an old high. We're going to set our stop loss at an old low. So you could set it wherever, right? That would be a 0.77 risk reward. That would not be a good trade. You want anything that's above 1-to-1, particularly a 2-to-1. But you could also target an old high here. We didn't hit it yet, 1.3, right? Or you can even target a higher high than that right here. Now, it was the end of the day, so obviously the trade didn't play out, but that's how you can do those fair value gap entries. You enter when the fair value gap gets set, right around where that fair value gap is. You're trying to get best entry inside this fair value gap, and then you're trying to, run it up to an old high or an old low if it's a bearish fair value gap. So there's lots of different ways you can learn to trade the fair value gaps, but understanding what it is and then how price is likely to react is going to, also be helpful. Now you see here we had a fair value gap that traded up quickly, but then we traded back down through it. So, you would have got stopped out if you took this one. And so they're not perfect. You win some, you lose some. This is on a 15-minute time frame. But again, important to know why that fair value gap is there and what to do with it. If not, it's just noise on your chart. So I'm going to take those off because, again, it is creating a lot of noise, a lot of stuff going on the chart. I'm also going to take off the order blocks just so we can see things better. Okay, so the order blocks are gone. Go back to a higher time frame chart. Okay, so all we got is liquidity levels turned on. Then we're going to pull that indicator back up. We're going to look at key levels. So here we have key levels at 4 hour, daily, weekly, monthly, quarterly, yearly. So no matter what time frame we're on, if we want to see 4 hour key levels, we click the 4 hour. Okay, so this is the previous 4 hour high, previous 4 hour low, and the 4 hour open. So if we're down on the 15-minute chart and we want to know what the 4 hour high low was, we got that. Same thing here. If we want to know what the daily high low open was, we got that, right? That's important because that gives us a range. Previous day open. Daily open. So this is Friday's open. Then it'll give us Thursday's high and low, right? Because again, it assumes we're still on Friday. It doesn't know we're on Monday yet. When Monday kicks in, it's going to give us the open of Monday, and it's going to give us Friday's high and low. Same thing goes with the weekly, the monthly, the quarterly, and the yearly. See all the blue levels? We got all of the different levels right there. So you pick what you want to use. I use the daily, weekly, and monthly. Might like the 4 hour. Could be helpful. I'd like to see AJ put in key levels for hourly. Okay, just send him a message that I'd like to see us have 1 hour key levels as well. Then you can see session histories. So I'm going to turn these on. Probably only going to be able to see this on a lower time frame chart. So see, do we have extended sessions on? Okay, so extended trading. Let's drop down even to a different time frame here. Okay, so on this, it's showing this just gives us the opportunity to put in different sessions. Okay, so what we got here is we got a New York session. That's our pink one here. And that's 8:30 to 4 o'clock. It's our New York session. Our London session is, I wonder what time zone this is. That shows us 8:30. Oh, that's why. London on Tesla's chart is going to show starting at 4 because that's when the pre-market starts. London session starts at 2 a.m. New York time if you were trading futures. But this can be changed. All of these can be changed. So what I want you to see is that we don't trade Tokyo on Tesla, but we do care when the silver bullet time macro is. And that silver bullet time macro is 10 o'clock to 11 o'clock, right? So I can change that. And then there can be a customizable. Any of these can be customizable. Right? So I'm going to put this inside the New York session. And you can see, do we have labels? There we go, show labels. New York, London, silver bullet. Right? Sometimes you got to take off some of the other labels if you want to see them well, but that's up to you. Or you can also extend the session out. Silver bullet, New York. All right, let's see if we can adjust those to a different space. Show labels on inside. There we go. Okay, New York, London, silver bullet tells us the day inside of that. So cool setting, right? That you can check your different sessions. Now, this New York session right here is the full session, right? And sometimes I only care about the morning session until noon, right here. So if you wanted to adjust that to just show the morning session, right now this is showing all of the London, and this is also showing all of the New York. And what you really want to focus on is the overlap of the London, the New York, inside the silver bullet, which is where you can find a really sweet entry. But high volatility going on during these two sessions combined. That's the only time that, all of this time here, the two sessions are combined, but then specifically inside the silver bullet, where London is closing and New York is kind of in full effect. See if there's anything else. That looks like all this indicator has to offer. So I hope this has been helpful. If you guys ever need help any further, as far as more questions about this, you can go ahead and ask me, send them my way. I'm happy to answer those questions. Also, you can direct some questions to AJ if they're regarding, specifically the way some of the indicator is built or operates, or if you're interested in seeing something added to this that's related specifically to smart money concepts. But I know that there has been a lot of questions, and so I hope this tutorial has helped answer those questions for you. And I look forward to doing some more of these for you guys later in the future. Thanks.